right, let's talk about taxes. I know this is everybody's favorite subject. I'm Mike, by the way. This is Mondays with Mike, and I'm not talking about property taxes. By the way, this is a real estate show. The focus of this is on residential real estate. However, the taxes I want to talk about are some of the ones that you don't think about or maybe even know about, but they're starting to come up more often. So, what am I talking about? These are transaction related taxes that the state and sometimes local municipality will charge you, and it's important to know them so that you know what your closing costs are and you can calculate the funds needed correctly. So, if you're a buyer and you're buying a property in New York, residential house that is over $1 million, there's a mansion tax that the buyer pays to the state at closing for 1% of the purchase price. Now, this has come up a lot recently because guess what? $1 million doesn't really buy you a mansion in New York, at least not where we are on Long Island or in most of the New York metro area. So, say what you will about the state maybe needing to up that amount, but for now, that is the law. It's 1% of the purchase price. So if you see something that's priced in the high nines and it's just under a million, just keep in mind if you go over the million mark, you're 10,000 or so in the hole, and it's not going to help you with the seller. It goes to the state. Now, if you're getting a mortgage, we're going to stick with the buyers first. If you're getting a mortgage, there's also a mortgage recording tax in New York State. And again, New York has its own. It's 0.5% of the borrowed money. The city will have its own, and some of the other counties have their own mortgage recording tax. And the thing to keep in mind here is that it's on new money. So if you are able to assume a current mortgage, which this doesn't happen in your normal, ordinary deal, but if it's for a high enough dollar amount and you have sophisticated attorneys involved, you might be able to assume the mortgage that's already on the premises, and the mortgage recording tax won't apply to that, only any additional funds that is new money. Throwing that out there, these are things that people may not be aware of. On the seller side, New York State has a transfer tax of 0.4%, not 4%, 0.4%. It's $2 for every $500 involved in the sale. That gets paid, again, it's a one-time transfer tax, gets paid to New York State, Department of Taxation and Finance. In some cases, this can become a buyer expense. There's nothing that says the seller has to pay it. In new construction, it's very common for the seller to actually have the buyer pay their transfer tax. And guess what? If it's new construction over $1 million, which is likely these days, you're going to be paying both the mansion tax and that 0.4%. New York City has its own version of this. If you're over $3 million, you're actually at 0.65% in New York City on the transfer tax when you're a seller. And there are some other ones. Peconic Bay area out east has its own transfer tax. There are region-specific transfer taxes that I'm not going to get into here, but just know that if you're buying or selling in New York State, you're going to have some transaction-related taxes that are one-time taxes. One other thing I want to bring up, if you are selling real estate in New York and you're not a New York resident, you actually have to pay your estimated capital gains to New York State, even though we're nowhere near tax time. We just passed, April 15th, April 18th. They want to know in advance that they're getting that money, that estimated capital gains. So you'll pay it from now, and then maybe you'll get a refund. This is only if you're a non-resident. If you're a resident of New York State, you'll just wait to the end of the tax year, and when you do your income taxes with your accountant, you'll figure out what kind of capital gains you have, if any. And I don't want to go too long, but I'm actually at only 4 minutes now. If you're not a U.S. citizen, more specifically, if you're a foreign person under what's known as FIRPTA, and you sell real property in the U.S., there's actually 15% of the purchase price that has to be withheld and paid over to the IRS at closing. And again, that'll get settled up at the end of the tax year. But if you're not a resident of New York State, or if you're a foreign person under that federal statute, for income tax purposes, the authorities want to know that they're getting their money, even if it's just an estimate, and they have to refund it later before you're out of their jurisdiction and they can no longer get it from you. All right, well, they say that death and taxes are the only certainties. Forget exactly who said it, Ben Franklin. I don't want to misquote here, but always worth returning to, even if people really hate hearing about it, returning to your taxes, your closing costs often. and early in the transaction is very important so you can plan, know exactly what you're netting or what you're bringing to the table. Hopefully this was helpful to you, and happy to answer any specific questions. Not a huge fan of nerding out on taxes, but they're a part of life, and happy to answer questions if you have them. Hope everybody's spring is rolling out nicely. Finally seems like it's starting to get nice out. Maybe we'll start to bring you some outdoor Mondays with Mikes in the near future. Hope everybody's doing well.